I do think there's going to be a pause from the Fed, but I don't think it'll be in December. I really anticipate that we'll have the move in December. That's about 80% priced in when you look at futures. I think they will go ahead and move 2 times in the beginning of the year next year in 2019. I mean, if things continue along the path they're on, we've had some strong fundamentals come out. We've got GDP numbers coming out later this week. If we get a 3 handle, which it seems like we probably will, that's good strength moving forward. We have earnings this week, obviously, a ton of earnings coming out. We've got about 87% so far that have reported that are meeting or beating their bottom line. So if we continue to have some momentum, I think we'll see the Fed keep moving. I don't think they want to give the appearance that they're backing down from any kind of pressure from the administration. And remember, February is the biggest month where we get refunds coming in, tax refunds. So the consumer will probably remain strong and allow the Fed to keep raising rates.
So, Brian, Victoria says no pause after December, maybe a couple of hikes early in the first half of next year, presumably March, maybe June. What do you think?
Well, I think that they might actually make a pause in March, so they're likely going to hike in December. But my big concern is that the Fed is going to likely hike in December despite seeing some rolling over in the economic data. Not to say that it's going into a recession or negative growth, but a slowdown in growth enough that it might make them want to pause because of the uncertainty around what is the neutral rate, what are the effects of the higher rates that you before were mentioning with Rick Reeder, what he was talking about as far as with mortgage rates moving up to 5% being a headwind there. Well, it's not just 5%. That's not a magical number. Every basis point counts. But I am concerned about the persistent weakness that we're seeing in housing and what sort of effect higher rates are having on the interest rate sensitive sectors of the economy, including autos and other durable goods. So maybe that's not necessarily going to all manifest itself immediately or in the fourth quarter, but I think you're going to see early signs of slowing in some of those more interest rate sensitive sectors of the economy, which will make them want to take a pause come March just to see if the economy can get its footing again.
So, Victoria, if it's all engines go for the next 3 rate hikes or so in the next, let's say, 6 months or so, does that mean that you're positive on the markets or not positive on the markets? Because there's 2 ways of looking at it. Either that this indicates that there is a very strong economic growth ahead, and or that the economic growth is all right, but the consumer and businesses will continue to face headwinds. I mean, as we had mentioned, it's not just a 5% mortgage, but with shorter term rates moving higher, it's credit card payments, it's auto payments, it's student loan payments, all sorts of consumer payments become much more expensive at the same time as, you know, corporations dealing with higher input costs, which we've heard so far during earnings season.
No, you're absolutely right, Melissa. And I'm not saying there aren't headwinds in the economy. I absolutely think we do have headwinds, and Brian's named those. You have named those as well. When it comes to debt, we are looking at credit card delinquencies. I think that can be a canary in the coal mine as far as the debt goes. But we also have to look and see that households have really deleveraged. That debt to income has actually come down. So even though some of the credit cards are going up as far as interest rates go, or the housing's going up as far as interest rates go, their actual level of debt has come down. So the households are in a better position than they were. But we also have to look and see that there is some tailwind, you know, going through this economy. So I don't think that we're off to the races. But, you know, we've had a little pullback. I think that gives us a little room to breathe, and that allows companies to report their earnings. We can have some strong growth from there. And, you know, the consumer is doing well. If you look at the retail sales, the control group, that annualized number was at 3.4%. That's just a little bit down from where we were last quarter when we had a 4.2% GDP. So I still think there's some strength that can move. But yes, we definitely have uncertainties with tariffs and trades, things going on in China. There's obviously some headwinds that we have to face.